Yeah, I think capital and returns has a strong correlation. So, for every additional rupee of capital after a certain level, which is like, for example, in the current marketplace might be 4 to 500 crores of capital on the option side. If you are taking more capital, then it actually hits your return. So, for 400, 500 crore capital, if you are able to make say 2% return, if the principle is very clear that I don't mind making 1.5% return, but let's deploy more capital. So that's a call that you have to take. But definitely it comes on the cost of the return. So you will not be able to maintain that as compared to some of the developed markets, and that's what I hopefully want to see in the Indian markets, where rather than being so shorter term focused, which is weekly or monthly, if you are focusing on quarterly or 6 month or a 1 year option, then you would see that maturity coming in and you would be able to absorb a lot of capital. Currently, there is a huge capital constraint in the derivatives market. You will not be able to really put in capital.